I need you to stop whatever you're doing right now and pay very close attention to what I'm about to tell you, because there is something happening in the XRP market right now that almost nobody is talking about honestly. And the people who should be warning you, the influencers, the YouTubers, the so-called analysts, they are either too caught up in the hype to see it clearly, or they see it and they are choosing not to tell you because it does not fit the narrative they have been selling you for months. This is not a bearish video. I'm not here to tell you XRP is dead. I'm not here to tell you to sell everything and run. What I am here to do is show you a trap that most XRP holders are walking straight into right now in February 2026 with their eyes wide open and their confidence high. And almost none of them can see it. And by the time they do see it, for many of them, it will already be too late to position themselves correctly. So take a breath, put down the price chart for the next 15 minutes. Let me show you what is actually happening beneath the surface of everything you think you know about XRP right now. Let us start with the thing that everyone is celebrating. XRP hit its all-time high of $3.65 in July 2025. The SEC case was settled. Regulatory clarity arrived. The headlines were extraordinary. Institutional interest was real and growing. XRP ETFs launched and pulled in $1.37 billion in cumulative inflows. Brad Garlinghouse was on television. Ripple was signing partnerships. The community was euphoric. And then something quietly happened that nobody wanted to talk about. The price started falling, not crashing, not collapsing, just steadily, persistently, uncomfortably declining. XRP finished 2025 down 21% from the year. It is currently sitting approximately 47% below that July 2025 peak. And right now in February 2026, it is trading in the range of $1.80 to $2.10. A range it has been stuck in for weeks, while the community keeps telling itself that the breakout is just around the corner. Here's the trap. The trap is not the price decline itself. Price declines happen in crypto. Every serious investor knows that. The trap is the story that is being told about why the price will definitely recover, and the critical things that story leaves out. Because when you only hear half of the information, you make decisions based on an incomplete picture. And incomplete pictures in financial markets have a way of becoming very expensive mistakes. Let me give you the complete picture, the one you are not hearing clearly enough. There's a structural issue with XRP that almost nobody in the community discusses openly because it is uncomfortable, and it challenges the most fundamental piece of the bull case. It is this: Ripple's customers, the banks, the payment companies, the financial institutions that use RippleNet, they do not have to use XRP. They can, and many of them do, use Ripple's technology, Ripple's infrastructure, Ripple's blockchain solutions, without ever touching a single XRP token. The token usage is optional, not mandatory, optional. This is documented, this is publicly stated, and this means that every partnership announcement, every new bank integration, every RippleNet expansion that sends the community into celebration, none of those announcements automatically translate into XRP demand. A bank can use Ripple's technology and generate 0 XRP transactions. 0. And many of them do exactly that. Now here is where it gets more complicated. Ripple has launched its own stablecoin called RLUSD. And here's the critical question that not enough people are asking directly. If a bank needs to move value across borders quickly and cheaply, and they can use either XRP or RLUSD, Ripple's own dollar-pegged stablecoin with 0 price volatility, which one do you think they're going to choose for their institutional clients? Which one do they not have to explain to their risk management team? Which one does not show up as a volatile crypto asset on their balance sheet? Stablecoins do not have the volatility problem. They do not require institutions to take on crypto price risk. They are faster to get regulatory approval for, and they are increasingly the preferred tool for the exact cross-border payment use case that XRP was built to dominate. The Motley Fool, one of the most widely read financial publications in the United States, stated directly in January 2026 that XRP risks being squeezed out of a competitive global payment space, specifically because stablecoins like RLUSD can do what XRP does without the volatility that makes banks nervous. Let that sink in for a moment. Ripple's own stablecoin is now a competitive threat to XRP's primary use case. This is not a fringe opinion from an XRP critic. This is a structural reality that the data supports. And then there is the supply question. This is the second part of the trap that most holders are not thinking about clearly enough. When Ripple launched XRP, they minted 100 billion tokens immediately, not over time. Immediately. 66 billion are currently in circulation. 34 billion are sitting in escrow, being released at regular intervals. Every single month, more XRP is unlocked and enters the potential supply. Unlike Bitcoin, which has a hard cap and a transparent, predictable schedule that creates genuine scarcity, XRP has a continuous drip of new supply entering the market. And when Ripple holds the keys to that escrow and has the ability to influence when and how those tokens enter circulation, it creates a supply dynamic that is fundamentally different from an asset with true scarcity. Standard Chartered, one of the most respected institutional banks in the world, has a price target of $8.50 for XRP in 2026. That is a real number from a real institution, and it represents genuine institutional optimism. But think about what it would take for XRP to reach $8.50 from where it is today. The market capitalization at that price would make XRP comparable to one of the top 20 companies in the entire United States stock market, similar to MasterCard, similar to Palantir. That is an extraordinary valuation that requires not just optimism, but a fundamental transformation in how XRP is actually being used at scale in real daily transactions by real institutions in volume that justifies that kind of market pricing. Is it possible? Yes. Is it guaranteed by the institutional partnerships and regulatory clarity alone? Absolutely not. And this is where the trap closes on most holders. Most XRP holders right now are carrying a belief that goes something like this. The legal uncertainty is resolved. Institutional adoption is confirmed. The ETFs are live. The partnerships are real. Therefore, the price will go up significantly. Therefore, if I just hold patiently, I will be rewarded. That logic is not wrong in its components, but it is dangerously incomplete because it ignores the timing risk, the supply pressure, the stablecoin competition, and the very real possibility that institutional adoption of Ripple's technology does not automatically create institutional demand for the XRP token specifically. And here is the part that should concern you most right now, in this exact moment. Just 2 days ago, on February 28, 2026, a critical vulnerability was discovered in certain XRP wallet applications. The bug was severe enough that it could have allowed hackers to drain funds from user accounts. The XRP ledger itself remained secure. Let me be clear about that. The vulnerability was in third-party wallet software, not the core protocol. The bug has been patched and no funds were actually stolen. But the incident is a reminder of something that the hype cycle consistently encourages people to forget. Every layer of the system that sits between your XRP and the XRP ledger itself, every wallet application, every exchange interface, every third-party tool, is a potential point of failure. And most holders have no idea which of their tools are running outdated or vulnerable software. The community celebrated when the patch came quickly. But the real question is how many holders were using those vulnerable wallets for months without knowing? How many people had their entire position exposed to a risk they were completely unaware of? This is what I mean when I say the trap is invisible. It is not always a dramatic price crash. Sometimes it is a quiet technical vulnerability. Sometimes it is a slowly building supply pressure. Sometimes it is a competitor product, including Ripple's own stablecoin, gradually taking the market share that was supposed to drive your token's value. Now, here is what I want to be very clear about, because I do not want you to walk away from this video thinking the message is sell everything and give up on XRP. That is not the message. The message is this: hope is not a strategy. Waiting passively for an inevitable outcome that multiple structural factors are working against is not investing. It is wishful thinking. And wishful thinking does not protect your capital or grow your wealth. The XRP holders who are going to come out of 2026 in a genuinely stronger position are not the ones who are simply holding and praying for a price recovery. They are the ones who are thinking clearly about the structural challenges, managing their risk properly, understanding what catalysts would actually change the fundamental demand picture for XRP specifically, not just for Ripple, the company, and making informed decisions rather than emotional ones. Here is what the actual data says about what would need to happen for XRP's bull case to be fully realized. First, on-demand liquidity adoption, which is the specific Ripple product that actually requires XRP, needs to grow significantly in transaction volume. Not just new partnership announcements, but actual ODL transaction volume in corridors that you can verify. This is trackable. Watch it. Second, the XLS66 initiative that would add native lending capabilities to the XRP ledger needs to ship on schedule in the first quarter of 2026 and see real institutional adoption. If institutions start using XRP ledger's DeFi features at scale, it creates organic demand that does not depend on Ripple's corporate decisions. Third, the Clarity Act classification of XRP as a digital commodity needs to pass. Brad Garlinghouse said it has an 80% probability by April. That is high confidence, but it is not certainty. And regulatory reversals have happened before in ways nobody predicted. Fourth, and this is the most important one, Watch whether major institutions that are integrating Ripple's technology are choosing to use XRP as their liquidity bridge or choosing to use RLUSD. That single data point will tell you more about XRP's actual future than any price chart or any influencer prediction combined. The trap that most XRP holders are walking into is the trap of confirmation bias. They are seeing every positive Ripple news headline and interpreting it as evidence that their specific investment in the XRP token is validated, when many of those headlines are actually about Ripple, the company building products that compete with or bypass the XRP token entirely. They are watching the price dip and telling themselves it is a buying opportunity without honestly asking whether the structural demand picture supports a higher price or not. They are celebrating ETF inflows without asking whether $1.37 billion of inflows is actually enough to drive the kind of price appreciation they are expecting, given the size of the circulating supply and the monthly escrow releases. These are not pessimistic questions. These are the questions that every serious investor asks before making a decision with real money. And the fact that so few XRP community members are asking them openly is itself the clearest sign that the trap is real. Here is what you should actually do with this information. Do not panic, sell. If you believe in the long-term vision, a panic reaction to structural concerns is just as irrational as ignoring those concerns entirely. But do size your position honestly relative to the actual confirmed use case, not the hoped-for use case. The confirmed use case today, ODL transaction volume, a verified institutional XRP usage, actual DeFi activity on the XRP ledger, is smaller than the market cap currently implies. The hoped-for use case, widespread bank adoption of XRP as a bridge currency handling trillions in daily cross-border flows, is real as a possibility, but not yet confirmed as a reality. Diversify within the XRP ecosystem. If you want exposure to XRP's potential without concentrating all your risk in a single passive hold, explore the yield-generating infrastructure that is being built on Flare Network. Earn XRP and Firelight Protocol are allowing holders to earn yield on their XRP exposure rather than just waiting for price appreciation. At 13% staking yields for FLR and compounding XRP returns in the Earn XRP vault, you are building your position through income rather than depending entirely on price movement to do all the work. That is a fundamentally more resilient strategy. Verify everything. The wallet vulnerability incident is a reminder to audit your security setup today. Hardware wallets are the gold standard for long-term holdings. If you are using a software wallet or a third-party application, check that it has been updated and audited. The XRP ledger is secure. The tools sitting on top of it may not always be. And most importantly, separate Ripple the company from XRP the token in your analysis. These are not the same thing. Ripple can succeed enormously and expand its institutional reach dramatically, while the XRP token underperforms if that expansion is driven primarily by RLUSD and non-XRP blockchain solutions. Track the specific metrics that reflect XRP token demand, ODL volume, XRPL transaction counts, FXRP locked on Flare, XRP used in institutional DeFi, not just Ripple's corporate partnership announcements. The people who will look back on 2026 as the year they got this right are not the ones who held blindly and hoped. They are the ones who understood both the opportunity and the structural challenges clearly, positioned themselves accordingly, and made decisions based on verified data rather than community sentiment. The trap is real. The opportunity is also real. The difference between falling into one and capturing the other is whether you are willing to see the complete picture even when parts of it are uncomfortable. If this analysis added genuine value to how you think about your XRP position, hit the like button so more people can access this kind of honest breakdown. Subscribe to stay updated as the real data points: ODL volume, Clarity Act progress, XRPL lending adoption, develop through 2026. And drop a comment below. Tell me honestly, did you know about the RLUSD competitive threat to XRP's use case before watching this? Because I think the answer for most people is no. And that honest conversation is exactly where informed investing begins. Stay sharp, stay honest with yourself, and never let the noise of community hype replace the signal of verified data.